Now in this video, we're looking at market structure shift. So the previous video, I talked about market structure and how to trade it, right? Talked about swing point and the BOS. That's the break of structure. Well, you need that information to understand market structure shift. And I need you to pay close attention because market structure shift can be confusing. But if you understand it, you can know the direction of the market and know how to make money from the forex market. So let's go straight into it. So let's recap on the previous knowledge in which we learned on the last video, right? We talked about swing point, and swing points help you determine the direction of the market. As long as the swing points haven't been broken, the market is still moving in that direction. Now this information is very important for market structure shift. Now first of all, what is market structure shift? Market structure shift is simply when the market changes from one direction to another, right? For example, let's say we have an uptrend which is making highs and lows like this. Well, let me delete this. Let's say we have an uptrend which is making highs and lows like this: higher high, higher low, higher high, higher low. And then all of a sudden this higher high and higher low stops and the market does something like this without making new higher high and then breaks structure, you understand, and then starts going lower. This is known as market structure shift, you understand. This whole concept here we see here is known as market structure shift. And in order to understand this, you have to understand market structure first of all, the break of structure, the swing points I told you about in the previous video, right? If you understand that, then good for you. If you don't, you should go back to that video and watch it very well, carefully, so that you can understand market structure shift, right? Well, by saying this, let's go into the live chart and see what it looks like. Now from this we can know that, okay, yes, this market is an uptrend, right? If you're watching this video, you should know what an uptrend is, you know what a downtrend is, and by looking at this you can tell that this market is actually an uptrend. All right, so we know that this is an uptrend, and let us mark the swing points. Now from previous knowledge, what is swing points? Swing points are the zones that led to the break of structure and made the market to keep moving in that direction. So this is our first swing point. If you're marking swing points, this is our first. Why? Because this is the zone that led to the break of structure here, and the market kept moving in that direction. You understand? That's just simply how it works. Now where is the next swing point? This is the next swing point, right? This is the zone that led to the break of structure, and the market kept on moving in an uptrend. We can see the market broke structure and kept moving in an uptrend. Now I want to let you in on something I have seen this week, and I know some of you might say, when marking a swing point, are we going to mark the wick or are we going to mark the body? Now the wick doesn't count as a candlestick in the market. We deal with candlestick to know where the market is heading to, right? We deal with, candle movement to know where the market is heading to. This week is just simply maybe due to a news release or an event occurred in the market which made the market create that long wick we see over there. So when marking swing points, you mark the body. Why? Because that body is important. Once market should break that body and keep going lower, we know that yes, that okay, this market has either broken structure or changed character and given a market structure shift. You understand? So this led to this break of structure. Now remember what I told you about break of structure. Break of structure is only valid after the release of 3 candlesticks. You understand? This is not a break of structure, rather this is a break of structure. Why? Because the first one, we know that the market didn't really give us a candlestick that broke this particular low, didn't give us a candlestick that broke this particular low, it just gave us wicks and then came down. So it was this zone that led to this break of structure. So it's this particular zone we call the swing point. I hope you understand that. You understand? So that is simply it. Now this is still an uptrend. You understand? It hasn't changed direction, but we are going to be seeing what a market structure shift look like. We are going to be seeing this market change direction in front of you. So let's focus on that. So now look at this. You can see this was the last candle that was formed, and now you might tell yourself this candle actually went below this previous swing point. Now there's something that usually confuses traders, right? There's something that usually confuses traders. There's difference between a break of structure and liquidity sweep. Now, sometimes liquidity sweep tend to make us feel like the market has changed structure. For example, if we saw the market here, right, we would have actually thought that, okay, not here, I will not say the market have changed structure there, but I will find an example to show you all. But for those who are, conversant with the market, you know what I'm talking about. If you saw the market in a particular zone, you'll feel like, yes, that this market has actually changed structure, or it's no more an uptrend, it's now a downtrend. Why? Because the market has created a long wick below the swing point. For example, I will show you something like that. For example, when we look at something like this, right, like I said, I told you I'll show an example. When you see something like this, you might say this market has changed character and the market is no more an uptrend. But surprisingly, this market can still do something like this and still bounce back up. You understand? This might just be a wick. This might just be liquidity sweep. You understand? So you don't count just one candle as a change of character or a market structure shift. Take note of this. Market structure shift must consist of 3 bullish or bearish candlestick break. 3 bullish or bearish candlestick break. It's same thing with break of structure, right? Whenever you see a break of structure, we know that is a confirmed break of structure after we've seen the market head in that direction, giving us candlestick breaks. You understand? Up to 3. We're looking at 3 high momentum candlestick break. Now, from what we can see here, this is just one. Starting from this swing point over here, we know that this is just one candlestick break. Now, if we should see another one here and another one here, we know that yes, the market has actually changed character, and that has given us a market structure shift. You understand? So let's look at what the market did from here. Let's just observe what the market did from here. Now, from this, we can see that the market actually formed a wick, a black wick, which was a black bearish candle, because we are looking at a change of character here. We want to see if the market actually changed market movement from an uptrend to a downtrend. And from what you can see, this is our trend line. This is the way the market is moving. This is our uptrend, right? And we want to see if this market has actually changed direction. Now, this was the previous swing point. It's the swing points we're counting. You understand? This was the previous swing point, and we want to see if this market has actually changed direction. Now, forget about this trend line. Sometimes this market, all you need to be looking at is your swing points. Now, you're going to count how many candlesticks the market used to break this swing point, not your trend line. You understand? This trend line is just what traders used to, identify the market. Like, for example, let's say you're using your trend line here, and the market formed this week. You would have told yourself that the market is now a downtrend, but we are working with this swing point over here, and as long as this candle did not close below this week, right, giving it 3 candlestick close, the market is still an uptrend. I don't know if you understand me. This, whenever you are looking at market structure shift, the trend line doesn't matter. That's just what I want to let you know. Your trend line doesn't matter. What matters is your previous swing points. That is where you will know if the market has actually changed direction or if it's still moving in your previous direction. And how will you know the market has changed direction? For a change of character, the market should give you 3 candlestick close in the opposite direction. For example, if the market is an uptrend, it should give you 3 bearish candlestick close, like what we are looking for here. And you can see this is just one. So we cannot call this a change of character or a market structure shift. Rather, this could even be a liquidity sweep. But let's just be observing. Let's just be observing what the market did after this. Understand? Now we can see that the market went all the way up, but started going down again. Now, we are not sure if this market is actually an uptrend anymore, because the market is now ranging over here, and probability it can still go down, right? So that is what we are looking at. We want to know if this market has actually changed direction or if it's still an uptrend, and that is what I'll be showing you all from here. And remember what I said, take note of this: a market structure shift must consist of 3 candlestick close. Now, the time frame doesn't matter. That's one thing I want you to know. Time frame doesn't really matter, but when you're analyzing your chart to know the direction of the market, always check the higher time frame. You understand? If you're looking for a market structure shift, let's say in the 15 minutes time frame, you must be a scalper, right? That means anything you're trading in that 15 minutes time frame shouldn't hold for long. We'll get to that when we get there. But for now, what I want you to know is that when you are looking at a market structure shift, it must consist of 3 candlestick close in the opposite direction. And from what we're seeing, this is just 1 candlestick close. You understand? So let's look at if we will see more candlestick close to call this a market structure shift. Now, remember, we're looking at our 4 hours time frame, and you can see this is what the market did next. Now, let's count the candlestick close all the way from this previous, swing point, right? From this previous swing point, let's count the candlestick close. Now, you no longer be looking at this place. It's here we're looking at now, right? Because that is the place that actually is going lower. You understand? That is the place that is breaking structure. So we can see 1, right? We can see 2, we can see 3, up to 4. We have gotten 4 candlestick close in that direction. Now we can see this market now is now a downtrend. And if we are looking at it in a bigger picture, this is the way we look at it. You understand? We can see that the market did something like this. The market was an uptrend, and all of a sudden it was creating new highs, but at a point it couldn't create any more high, and then we saw a push lower. Now this is simply the concept of market structure shift. It's just the market changing direction from an uptrend into a downtrend, or from a downtrend into an uptrend. Now, how are we going to find entry when we've seen this? The first thing you should understand is we look for the candlesticks. How many candlesticks closed to know that is a good market structure shift? And we can see up to 4 candles closed at this point. You understand? Now, the next place you'll be finding your entry is from the previous swing points. What do I mean? This is the swing point that led to the market structure shift, right? This is your first lower high, because now we're looking at the market in a downtrend pattern. This is your first lower high, and in that zone, what you need to do is look for your point of interest in the market. And where do you find your point of interest? Remember, when you're trading, you trade from premium or discount zone, from a point of interest, from a zone in which the market is likely going to respect. Some people might call this a trend already and say the market is already going down. You understand? And you start looking for entry. Yes, you can do that, but I love trading from point of interest. So I'll be looking for either a fair value gap, either a breaker block, or either an order block to trade from. You understand? And from what I've seen here, we can see the market, there's a fair value gap here, right? There's also a fair value gap here. You will learn all this as we move on, but just for now, let's just understand how to look for entry. So you can see there's a fair value gap there. There is a fair value gap here as well. There's also an order block. But let's just see what the market did after that. You can see the market is going down. So I want the market to do something like this, all the way up here, give me an entry, and then go all the way down. And then we now know that this market is now a downtrend. We can now know that this market is now a downtrend. So that is what I want the market to do. Let's see what it did from there. And now we can see that the market has gotten to my first fair value gap. And remember, once the market gets to a fair value gap and have swept liquidity, we can use this previous low as liquidity. Once the market has gotten to our first fair value gap and has already swept liquidity, there's no point to wait for the market to get all the way to the top one, because this one is closer to liquidity. You understand? We always trade from a point of interest that is closer to liquidity. So let me delete this line, and let me also delete this line. So where will I be finding my entry? I'll be finding my entry somewhere here. So this is what I would do if I was trading this market. I would actually take the trade from here, putting my stop loss just above this zone here, and then my take profit should be here. So let's see what the market did after that. Or maybe I don't want to be greedy. Let me not be too greedy. My take profit should be here, just in case the market wants to misbehave. So let's see what the market did after that. So went straight down. The market just respected that zone and went straight down. You understand? So that is how you find your change of character or your market structure shift. Remember, a market structure shift must consist of 3 candlestick close from the previous swing point. And then once the market has already, given us that 3 candlestick close, the first zone in which created the highest zone will be known as our next swing point. You understand? The zone in which gave us that change of character will be known as our next swing point. So that is where we'll be finding entry from. We'll find our point of interest and we'll trade the market from there. So let's see what the market did after this. Let's see what the market did after this. We can see the market kept on dropping lower, and now this market is officially a downtrend. That is how you know a market structure shift. You understand? It wasn't that hard. This market is officially a downtrend. It was an uptrend all the way from here, but got to this zone and gave us a market structure shift, and we entered from this point of interest and the market went all the way down. It's very simple, guys. It's very simple. So we can see that where is our next swing point? From what I told you, this is our next swing point, right? This is our next swing point. We can see the market is going to still come all the way to this place to respect it. So this is our next swing point. You understand? And this was, this is our lower low that gave us this previous swing point. You understand? So what pattern did this market just create? It just created a lower low, right? Lower high and another lower low. You understand? So this was our lower high, this was our lower low, and this is our lower high, and we've gotten another lower low. So what are we going to be waiting for? We're going to be waiting for another sell opportunity in this market. And remember, you don't buy in a downtrend, you only sell in a downtrend. The same thing, you don't sell in an uptrend, you buy in an uptrend. So what you're going to be waiting for is another entry opportunity. So that is just simply how we trade the market structure shift. So the intake I want you to take from this video is that a market structure shift happened after a close of 3 candlesticks in the opposite direction. Let's say the market is moving up. 3 candlesticks should close below the previous swing point before we know that yes, this market is still, or it's no longer an uptrend, is now a downtrend. The same thing goes for BOS. You understand? We want to know that the market has closed, giving us 3 candlesticks below the previous swing point before we know that this market is still a downtrend. You understand? Your key point to understand in this video is 3 candlestick close, both for BOS and both for market structure shifts. That's both for trading in market direction and also trading opposite direction when the market has changed its previous direction. I hope I'm not confusing you. So that is what I want you to know for market structure shift. Now, for those who might say, does this work only in an maybe in a higher time frame? You understand? It also works in the lower time frame. But when you're trading lower time frame, you have to know where the market is heading in the big picture. For example, let me go lower. All right, so for example, I'm in the 30 minutes time frame in USD CHF, and let's say I'm a scalper, right? This was my previous swing point. We know this market is an uptrend. This was my previous swing point that led to the break of this structure. We can see, let me mark it out, right? You can see this, there was 3 candlestick close here, and we can call this a break of structure. You see, the 3 candlesticks still works. You understand? Now the market came back to this OB. Let's say I'm in the lower time frame. This is how I'll trade. The market came back to this OB. I'm a scalper, right? I'll just take the trade from here and I'll aim all the way here. I wouldn't be too greedy. Scalpers, they don't stay too long in the market, so this will be my profit. The market has already gone all the way up. You understand? And if you notice, it went all the way up, but in this movement, it didn't really give us a 3 candlestick close above this, because it's just 1 candlestick. So I wouldn't take another trade because I don't know if this uptrend is still valid. You understand? I wouldn't be buying again. So even if market should come all the way down again, I wouldn't be buying again. Why? Because I don't know if this uptrend is still valid until I see 3 candlestick close above this previous swing points. Until I see 3 candlestick close above this previous swing points. You understand? So what I'm looking for is 3 candlestick above this previous swing points, or let's say 3 candlestick below this previous swing points. Because if you look at it now, this market is ranging. this market is no longer going up. As long as there's no 3 candlestick above, right? This is the lower time frame. As long as there's no 3 candlestick above, or there's no 3 candlestick close below this previous 2 swing points, the market is still ranging. And remember, I told you this works in the lower time frame, but you need to understand where the market is heading in the higher time frame. Now observe, let's see what the market did next. Now we can see that this ranging market has ended. The market gave us a very huge bearish candlestick below, all the way from up here, right? And it went all the way down, giving us 1 candlestick close, 2 candlestick close, right? And probability, if you're looking at this in the 15 minutes time frame, you'll be looking for a sell opportunity. Let me say you'll be looking for a sell opportunity, let's say either here, right? Because we can call this a breaker block. You understand? Either here, you can call this a breaker block. Sorry, you might be hearing some noises. I'm doing this in a public place. So you can call this a breaker block, or you can either wait for the market to create liquidity, engineered liquidity, like something like this, right? Then come all the way up here, and then you can now trade from here, either this zone as well. You understand? So that is where you're looking for entry if you're trading this blindlessly, all right? If you're not looking at the higher time frame. But now let's look at the higher time frame. Let's look at the 1 hour time frame and see what the market is doing at this zone. We can see that in the 1 hour time frame, sorry, my network is, you can see at the 1 hour time frame, this market is actually an uptrend, and this big move you said is a sell is actually just a retracement. You understand? This was the previous, swing point that led to this market structure, this break of this market structure. You understand? That led to this BOS. That was the previous swing point. You understand? So we're expecting markets to retrace and come all the way back down here, and then we can now see a move up, maybe from here. You understand? We can see a move up, back upward. You understand? So that is why you always have to take note of the higher time frame. So for example, let's say I was trading from that lower time frame, from that 30 minutes time frame, and maybe I was looking for a sell entry from here, wanted the market to come all the way back down here, and I'll take my sell. Let's see what the market did afterwards. Yeah, most traders will be very happy to see this because the market is even giving them confirmation. They might call this a sweep of liquidity, right? And they'll be hoping that once the market gets to that area, they will keep selling, not minding what the market is doing in the higher time frame. So boom, that is what the market did. You understand? The market created this liquidity, making the trade even look more promising. You understand? The trade is looking more promising at this point. My network. So the trade is looking more promising at this point, and the market only came all the way up here to sweep that's your SL and keep going higher. You understand? So that is why you always check what the market is doing in the higher time frame. And if we look at this market will obviously keep going up and keep going up, because this, in the higher time frame, this is our next swing point. You understand? This will be our next swing point in the higher time frame, and the market just gave us that swing point. For those who are trading in the higher time frame, they must have caught a buy, who understood the market structure. They must have caught a buy and they would have traded this upward. You understand? So that is just what I want you to understand. Always take note of what the market is doing in the higher time frame and trade with that. Never just jump into a trade. You understand? And also, like I said, this break of structure concept, or change of market structure shift concept, right? It works both in lower time frame and higher time frame. That 3 candlestick close is very important. You understand? The 3 candlestick close is very important to know the direction where the market is heading. A 3 candlestick close in in an uptrend in the right direction is known as a BOS, right? The market is still going up. But if the market should go down in an uptrend, giving you 3 candlestick close below the previous swing point, we know that yes, the market is now a change of character or a market structure shift. You understand? So let's look at it in a downtrend, and we can call it a day. Now I want you to pay close attention, because in this particular area of your chart, I will show you the importance of waiting for 3 candlestick close, whether a market structure shift or a break of structure. So first of all, we know this market is a downtrend, right? This was the previous swing point, because it was this swing point that led to this close of candlesticks. You can see more than here, there's more than 3 candlestick close. You understand? There's more than 3 candlestick close. You can see 1, 2, 3, even kept on going all the way lower. You understand? Now let's look at what the market did next after that. The market created another high and went to this FVG zone over here, right? For those who haven't learned fair value gap, make sure to learn fair value gap, very important. Went to this FVG zone over here. We can see I use this as a liquidity sweep. For those who will be thinking that is an order block, no, went to this, and then let's see what the market did after that. It was a rough one, but the market actually dropped after that area. You understand? The market just gave us a massive sell at that area, which I want you to take note of. So now I want you to observe something closely. Remember, this was the previous swing point, right? This was the previous swing point here, and this was our previous lower zone, right? This position over here. This is our next swing point, which is known as what? A lower low. Now, in order to know if this market is still moving downwards, it has to give us a 3 candlestick close below this low. You understand? And in order to know if this market equally wants to change direction, it has to give us something that would break structure over here, maybe go all the way up and break this swing point up here. But that swing point is not really, it doesn't really matter now because it's too far. So I need you to just observe something. This lower zone over here, this is our previous swing point. The lower low, that is where I want you to observe and look at the market from. You understand? So let me show you what the market did after that. You understand? So let's see. That's what the market did after that. Now the market did not give us 3 candlestick close, but started going up. At this point, at this particular point, some people might say, okay, for example, this market might actually be coming all the way up here. You understand? Might use this stop as liquidity, sweeping this liquidity, and then come all the way down again. Yes, you can see that is possible. But let's see what the market did though. Let's see what the market did. Now at this point, this was what the market did. You understand? And you remember, we are in a downtrend. We want to see if this market will still keep on going lower. And let's say the market, you saw the market like this. What you call this is what? A ranging market. Why? Because this market did not break this previous high. You understand? And at the same time, it came back to this low. Now, what you're going to be observing is you want to see if the market will give you a break 3 candlestick close. And remember, the 3 candlestick close not only have to be a 3 candlestick close, it has to show you good momentum, high good momentum. Because if the momentum is not strong, it's officially known as maybe a liquidity sweep. You understand? So let's look at what the market did after that. So one thing I've observed in forex markets is it's good to be patient. You understand? It's good to be patient. So now we saw the market gave us actually 3 candlestick close, but we can see that the last one wasn't of good momentum. Then the next thing we saw a white bullish candle. Now what does this mean? It means that you simply just observe what the market will do next. You don't go and start finding entry and saying, okay, maybe this market will get to this breaker block. You understand? Maybe the market will respect this zone. You don't do that. Why? Because if we should go over to the 4 hours time frame, this will just be maybe 2 candles before a white bullish candle. You understand? Before a white bullish candle. Let's see what the market did next. Now the market came back to that our breaker block, like I said, and it seemed like it wants to respect it. It looks like, yes, market might actually respect this zone, but we can see another bullish white candle over here. Your candlestick matters. How the market shows you that, okay, this is the momentum of where the market is heading to. If the market is bearish, you will see bearish momentum, huge bearish candle being formed. If the market is bullish, especially in the higher time frame, you see huge bullish candles being formed. Now we know that this market is a ranging market, and this can officially just be a sweep of liquidity. This might just be a sweep of liquidity to the lower side. You understand? let's see what the market did after that. Now we can see this market is just going up now. At this point is going up, and remember, like I said, at this point the market is ranging. And take note of this: most times before a market structure shift, the market will range a little, right? Not every time, this is not certain, but most times before a market structure shift, the market will range a little. So this officially known as a ranging market. And when trading a ranging market, what do? You just simply draw your previous zone in which the market would break, right? So what we're expecting is, if this market should officially break this zone, I want to see the market come back to this zone. It will most likely respect it. Why? Because there were a lot of sellers at this zone. Now those sellers at this particular zone pushing the market down will turn to buyers in case this market should break it and come all the way here. They will turn to buyers to push the market further up. That's just simple price action. You understand? That's simple price action. So like I said, the market has actually given us a market structure shift. You understand? The market was a downtrend before, and all of a sudden we can see a decline in that downtrend, right? We can see that the market all the way declined all the way from here, and we can see that the market is now an uptrend. Because of this range over here, the market broke it and is moving higher. You understand? The market is now moving higher because it broke the range. Now, like I said, whenever the market is ranging, for a market structure shift, always target the support or resistance level. That's just simple price action pattern, simple market price action, because a lot of sellers were at this zone before, and those sellers will turn to buyers. So what are we going to do? We will mark it correctly. So this is our zone. We don't mark the wick, you only mark the head, the place in which the market we're expecting. So this will be my entry, particularly at this zone, and this will be my stop loss just below here. So I will just aim, I will not be too greedy, I'll aim for here. So let's see what the market did. And voila, that is exactly what the market did. You understand? So that is simply how you trade market structure shift. Remember, the intake for this video is market structure shift must show you 3 candlestick close. It's simply when the market changes direction, but that direction must show you 3 candlestick close, and those candle must not just be any little candle, it must be high momentum candle in the opposite direction. Another intake is that before a market structure shift occur, the market likely would range. It will form a ranging structure. Why? Because this is the war between the sellers and the buyers, you understand, trying to decide where the market will still go. So this range over here is just simply the market being indecisive of where it should go, and you shouldn't trade at all when the market is doing this. So here is where you should start finding your entry after the market has given you a break from that range. You understand? A break from that range, and the break must also consist of 3 candlestick close. And once the market has broken from that structure, you head for the previous resistance or support, and the market will likely respect it and keep going higher. You understand? So that is simply how you trade market structure shift. I hope you understood this video. I actually took my time to explain this. That is why it's this long. So I hope you understood it, and in case you have anything that's confusing you, let me know. Ask me your questions. I'm here to answer you. For the meantime, we'll call it a day. Have a lovely day ahead.